very good morning. You're watching News 9 Live. I'm Karthik Malhotra. Chinese AI bot manufactured and delivered by a Chinese company called DeepSeek is striking deep in the heart of AI-driven companies in the US and causing a market rout across the world. We'll tell you all about that on the show today. And also on the show, back home, just 4 days to go for Budget 2025. Will Finance Minister Nirmala Sitharaman deliver on the promise of job creation? Or is this going to be another year of jobless growth? I'll be discussing that with Mohandas Pai, Professor Arun Kumar and HR strategist Prabir Shah. You're watching Morning Brief at 9. This is Morning Brief at 9 on News 9 Live. First up, a look at all the global headlines making news today. Tech sell-off drags S&P 500 and Nasdaq lower as low-cost Chinese AI model called DeepSeek strikes deep and sparks fears. Tesla chief Elon Musk joins the conversation on X, reacting to claims that DeepSeek secretly has 50,000 NVIDIA H100 chips, but isn't revealing it due to US export controls. Meanwhile, DeepSeek's AI assistant disrupts market tops US App Store amid cyber attack and NVIDIA stock plunge. Tesla joins BMW and Chinese EV makers in challenging EU tariffs on China-made electric vehicles at European court. US and Colombia avert trade war as Colombia agrees to accept US deputation flights after US President Donald Trump threatened tariffs and sanctions on the nation. Meanwhile, Denmark will boost Arctic military presence with a $2 billion investment amid renewed US interest in Greenland's strategic importance. A study has found harmful chemicals in popular smartwatches from 15 brands, including Apple and Google, raising health concerns. Severe flooding hits western France as Storm Herminia causes widespread damage in Rennes and surrounding areas, prompting red alert for major flood risks in Brittany. And Jet2 air crash probe reveals duct remains in engines. Mystery surrounds deadliest South Korean air disaster. And in what has taken the world by surprise, a Chinese-built AI chatbot by DeepSeek is threatening to challenge the hegemony of players that have been betting on AI and the chips that AI use. In fact, Nasdaq saw the biggest rout yesterday as markets in the US closed with the NVIDIA losing as much as 17% and its founder Jensen Huang now poorer by $20 billion in just a single day. But it's not just the NVIDIA story. Other stocks which are popular and invest heavily in the AI space have also taken a beating after DeepSeek announced its plans to go ahead and launch what is touted to be the cheapest yet AI chatbot. In fact, stocks of Microsoft were down 2.14%, Google was down 4.2%, and like I told you, NVIDIA down about 17%. More in this detailed report.
The S&P 500 and the Nasdaq ended lower on Monday, as NVIDIA and other chip makers sold off after surging popularity of a low-cost Chinese artificial intelligence model raised investor worries about the outlooks for current AI leaders in the United States. Chinese startup DeepSeek rolled out a free assistant it says uses cheaper chips and less data raising questions about investor expectations that AI will drive demand along a supply chain from chip makers to data centers. NVIDIA plunged about 17%, shaving nearly $600 billion off its market valuation, while an index of semiconductor stocks had its biggest single-day percentage decline since March 2020. But the Dow actually rose about 0.2%, while the S&P 500 dropped about 1.5% and the Nasdaq fell 3%. Despite the big moves in the red for some stocks, Zacks Investment Research Client Portfolio Manager Brian Mulberry sees encouraging signs.
Well, in the market today, we're seeing it across kind of the different indices, a very different experience. NASDAQ down sharply, the S&P kind of in the middle, and the Dow turning slightly positive. If I pivot that and talk about just growth and value, growth down sharply, but value is actually up over 1% on the day, in particular, large cap value. What does that mean? Investors are coming back to, I think, a little bit more common sense valuations, but also very strong, very healthy balance sheets.
Other stocks on the move included AT&T, which jumped 6% to a 3.5-year high after its fourth quarter wireless subscriber growth surpassed expectations. And shares of Ralph Lauren slipped 3% after brokerage Raymond James cut its rating to market perform, citing the huge rally in the stock, which surged 60% last year and has gained another 11% so far in 2025.
And as Wall Street was shaken to its core, Tesla chief Elon Musk joined the conversation on his platform X, reacting to claims that DeepSeek, secretly has 50,000 NVIDIA H100 chips, but isn't revealing it due to US export controls. Remember, DeepSeek had said that it operates at a fraction of the cost and uses only 10,000 NVIDIA chips. Remember, this was a bone of contention between US and China over the last 2 years, where US had curbed the export of AI chips to China, trying to prevent China from building its own AI model, similar to the ChatGPT or Microsoft's Copilot. Obviously, backing a post by Scale AI CEO Alexander Wang, Musk also threw some humor into the mix, calling the model DeepSeek in another post. As the tech world reacts to these changes, everyone is watching and waiting to see what happens next in the global AI competition. And following a surge in the popularity of its AI assistant, DeepSeek announced that it would temporarily limit new restrictions due to a cyber attack. Earlier in the day, yesterday, the company also experienced outages on its website after the AI assistant became the top rated and the most downloaded free app on Apple's App Store in the US.
Chinese startup DeepSeek, whose new low-cost AI model rattled tech stocks Monday, suffered a large-scale cyber attack, causing it to temporarily limit registrations. Earlier in the day, DeepSeek said it was hit by outages on its website after its AI assistant became the top-rated free app in Apple's U.S. App Store and overtook ChatGPT in downloads. DeepSeek claims it uses cheaper chips and less data, challenging the idea that advanced semiconductors, like those made by NVIDIA, are needed to run AI applications. That sent major tech stocks tumbling, with shares of NVIDIA falling as much as 17.8% at one point Monday morning. Brian Jacobson is chief economist at Annex Wealth Management.
This could really be a change in the script, a change in the narrative around artificial intelligence, where it's no longer about what has been called the picks and shovels. That was like NVIDIA, as far as with the chips that they were selling, and maybe even the data center providers. Now it's moved on from the picks and the shovels more to perhaps the refiners and the jewelers in that narrative, where it's more about what's the actual use case of the technology.
DeepSeek's popularity has also upended widely held views about U.S. dominance in the AI space and the effectiveness of Washington's export controls targeting China's advanced chip and AI capabilities. Little is known about the company behind DeepSeek, a small Hangzhou-based startup founded in 2023, when search engine giant Baidu released the first Chinese AI large language model. Since then, dozens of Chinese tech companies, large and small, have released their own AI models, but DeepSeek is the first to be praised by the U.S. tech industry as matching or even surpassing the performance of cutting-edge U.S. models.
And what begins to reek somewhat as double standards by Donald Trump's right-hand man, the chief of Tesla, Elon Musk. Well, Tesla has joined BMW and Chinese manufacturers in filing a challenge at the Court of Justice of the European Union against EU's tariffs on electric vehicles made in China. According to a court filing made public on Monday, Tesla is disputing the decision, which could have major repercussions for the electric vehicle industry and international trade relations. Here's more.
Tesla is the latest big automaker to challenge the EU over its tariffs on China-made electric vehicles. It joins BMW and Chinese producers in filing a challenge at a top European court. The move was revealed Monday in a filing on the website for the Court of Justice of the European Union. The challenge will open a new front in Brussels' conflict with Tesla CEO Elon Musk. Earlier this month, the EU stepped up its probe into Musk's social media platform X over content moderation. The EU imposed tariffs on China-made EVs at the end of October after an anti-subsidy investigation. The rate for Tesla was set at 7.8%, lower than any of its competitors. The court document showed the US automaker lodged its complaint last week. Chinese EV giants BYD, Geely and SAIC have also challenged the tariffs at the court.
And staying with tariffs, after US President Donald Trump threatened tariffs and sanctions on Colombia, the White House announced that Colombia had agreed to accept military aircraft carrying deported migrants from the US, easing tensions between the two nations. Remember, Colombia's president had condemned the military deportation flights and said that he would never carry out a raid to return handcuffed Americans to the US. Here's more.
The US and Colombia pulled back from the brink of a trade war on Sunday. U.S. President Donald Trump had threatened tariffs and sanctions on Colombia for refusing to accept military flights carrying deportees as part of his sweeping immigration crackdown. But late on Sunday, the White House said Colombia had agreed to accept the migrants after all, and Washington would not impose those penalties.
El gobierno de Colombia.
Colombian Foreign Minister Luis Gilberto Murillo on Sunday said his country's government had, quote, gotten over its impasse with Washington. Earlier, Colombia's President Gustavo Petro had condemned the military deportation flights and said that he would never carry out a raid to return handcuffed Americans to the U.S. However, he also said that Colombia would welcome home deported migrants on civilian planes and offered his presidential plane to facilitate their, quote, dignified return. The Colombian statement did not specify whether the agreement it had struck with the U.S. included military flights, but it did not contradict the White House announcement. It added that Murillo and Colombia's ambassador to the United States will travel to Washington in coming days for follow-up meetings. The use of U.S. military aircraft to carry out deportation flights is unusual. Some of them carried out 2 flights to Guatemala on Friday, while Mexico also refused a request last week to let a U.S. military aircraft land with migrants. Trump has said he is thinking about imposing 25% duties on imports from Canada and Mexico on February 1st to force further action against illegal immigrants and fentanyl flowing into the U.S.
And staying with Donald Trump, his expansionist plans are being threatened. Denmark announced that it would allocate $2 billion to enhance military presence in the Arctic. The decision comes in response to U.S. President Donald Trump's renewed interest in controlling Greenland, a semi-autonomous territory of Denmark. The investment is seen as part of Denmark's strategy to assert its influence and safeguard its territory in the region, particularly as geopolitical tensions rise over control of Arctic resources and shipping routes. Take a look.
Denmark announced on Monday a $2 billion boost in defence spending to increase its military presence in the Arctic. It comes after pressure from US President Donald Trump, who has shown renewed interest in controlling Greenland, the semi-autonomous Danish territory and strategically important island. Denmark is responsible for Greenland's security and defence, but has limited military capabilities on the enormous island, regarded as a security black hole. At present, Denmark's capacities include 4 aging inspection vessels, 1 surveillance plane, and a dozen dog sled patrols. The new deal includes funding 3 new Arctic Navy vessels, long-range surveillance drones, as well as satellite surveillance, Denmark's defence minister said at a press conference. Denmark's political parties agreed to set aside more money for the Arctic in a deal to be presented in the first half of the year. The US military has a permanent presence in northwestern Greenland, a strategic location for its ballistic missile early warning system.
A new study has revealed that smartwatches from 15 brands contain harmful forever chemicals linked to cancer and hormone disruption. Researchers from the University of Notre Dame examined 22 watch brands and found that 15 of them contained high levels of PFAS, chemicals commonly used in the production of synthetic rubber, which is popular material in smart and fitness watch bands. While the specific brands involved were not disclosed, some of the tested watches were from major companies such as Nike, Apple, Fitbit and Google. The European Union has proposed a ban on PFHX1 in consumer products, including watch bands, due to its harmful effects. Well, time for a short break right here on Morning Brief at 9. But coming up on the other segment, we will decode what the thawing of India and China relations mean, as well as SEBI's hunt for a new chief. And later on the show, we will have the budget expectations when it comes to job creation with Mohandas Pai, Professor Arun Kumar and Prabir Shah. You're watching Morning Brief at 9.
Associate sponsor, New Virtus GT line, style to wander.
Your promise is IGI certified. Your legacy is IGI certified. Your ambition is IGI certified. Your diamond is IGI certified. Authentic moments need authentic diamonds. Get your diamonds IGI certified. 14-step grading process. 50 years of trust. IGI Trust Certified.
कि बड़ा होके मम्मी का, पापा का, दादू का सबका ध्यान रखेगा।
रिटायरमेंट के बाद किसी पे बोझ ना बनने का परफेक्ट प्लान। कैनरा HSBC लाइफ इंश्योरेंस रिटायरमेंट प्लान। कैनरा HSBC लाइफ इंश्योरेंस, प्रॉमिसेस का पार्टनर।
Mama must be missing us, na?
Let's take it one bit, give me one day. Feel the itch under my skin, it's a one day. You been like it when you see me in that, hey. It doesn't matter, just gotta get going.
New GT line, Taigun and Virtus. Volkswagen.
Welcome back. You're watching Morning Brief at 9. The markets have opened just a few minutes ago, and let's look at the mood on Dalal Street this morning. A positive start. All indices in the green this morning, but Nifty 50 still barely managing to hold the 23,000 levels. In fact, even with a 0.5% increase in trade early this morning, Nifty is at 22,935 levels only. Remember, there was a massive sellout on the markets yesterday, which led to the Sensex crashing about 1,000 points or so in trade. But this morning's start, not able to pair those losses, but at least a fillip and a gap up from how they closed yesterday. Possible triggers, of course, yesterday's fear and panic of DeepSeek, China's AI chatbot, which sent US markets tumbling, also had a shadow on India. But that's not all. I think this morning, one of the positive triggers for the market is the monetary easing measures announced by the RBI and the injection of 1.5 lakh crore rupees through various open market operations by the RBI, hinting perhaps at a rate cut in the upcoming RBI's upcoming Monetary Policy Committee meet, which is scheduled to take place in the first week of February. Let's look at how the stocks are performing this morning. Well, a positive start for the banking sector. HDFC Bank up about 1.3%. ICICI Bank holding up about 1.2%. Reliance has had a flat opening today. Even the tech space looks good, with Infi up about 1.3% or so in trade this morning. Of course, these are early signs, still far from the 23,000 levels on the Nifty, as I told you. Let's see what the day has in store for the markets. But for now, let's move on to other headlines making news in India today. There's been a breakthrough in India-China relations as Foreign Secretary Vikram Misri meets Chinese Foreign Minister Wang in Beijing. Resumption of direct flights soon, but border de-escalation issue still pending. Prime Minister Narendra Modi speaks to President of the United States Donald Trump on the phone, says India is committed to a mutually beneficial and trusted partnership with the US. The Reserve Bank of India will inject 1.5 lakh crore rupees to boost liquidity. 60,000 crore rupee bond buyback, variable rate repo auction for 50,000 crore rupees, and rupee dollar swap on buy and sell is on agenda. Economists are now expecting a rate cut could follow. SEBI's hunt for the new chief of the market regulator begins. No extension likely for Madhabi Puri Buch, whose 3-year term ends on 28th of Feb. Traditionally, the government gives a 2-year extension. Narayana Health launches Arya insurance with a 1 crore rupee coverage. This comes months after the launch of Aditi insurance by the now integrated managed health provider. Remember, you first heard of Dr. Devi Shetty's plans on News 9. In a surprising move, SaaS player Zoho's founder Sridhar Vembu steps down as CEO and takes the post of chief scientist to concentrate on research and development efforts. Stock markets remain volatile and cautionary ahead of Union Budget 2025. US Fed rate decision later this week, Trump's policies and the upcoming RBI Monetary Policy Committee meet in February are keeping investors on their toes. Budget 2025, countdown to 1st Feb begins. Will Finance Minister bite the bullet on tax cut demands? And we discuss on the show today, how will Budget 2025 help create private sector jobs? Will this be the era of jobless growth continuing, or are there going to be growth in jobs? Let's begin with the thawing of India and China relations. Well, India and China have reached a major diplomatic breakthrough, agreeing on several key measures aimed at improving bilateral ties following the completion of their disengagement process in November. These measures, outlined in an official statement from India's Ministry of External Affairs, include the resumption of the Kailash Mansarovar Yatra this summer. It also has the restoration of direct flights between New Delhi and Beijing and the facilitation of visas for journalists and think tanks. Both nations also plan to share trans-border river data, marking another step in fostering cooperation. The agreements came after a series of high-level meetings, including discussions between India's Foreign Secretary Vikram Misri and Chinese officials like Vice Foreign Minister Sun Weidong, Foreign Minister Wang and Liu Jinchao, the Minister of International Department of the Communist Party of China. The two sides agreed to focus on destabilizing and rebuilding bilateral relations with an emphasis on people-to-people exchanges and long-term economic cooperation. De-escalation on the borders, however, remains to be agreed upon, and China's demands of India restoring banned Chinese apps are still pending decision. Remember, tensions between India and China escalated in 2020 as troops clashed and there was a skirmish in the Pangong Lake area of Ladakh, which broke out. This resulted in cancellation of visas and direct flights, as well as India banning tens of Chinese mobile apps. And moving on, Prime Minister Narendra Modi and US President Donald Trump held their first telephonic conversation since Trump began his second term in the Oval Office yesterday, that is on Monday. During the call, both leaders emphasized their commitment to strengthen the India-US partnership across various sectors, including technology, trade, investment, energy and defense. They also discussed global issues such as situations in West Asia and Ukraine, reaffirming their shared goal of fostering global peace, prosperity and security. The leaders expressed their intention to stay in close contact and are expected to meet in person soon, likely in mid-February if Trump attends the AI summit in Paris. Remember, the US is India's largest trading partner, with two-way trade exceeding $118 billion in FY24 and India's trade surplus at about $32 billion. Meanwhile, it seems there will be no extension for SEBI chief Madhabi Puri Buch. The Finance Ministry is seeking a new SEBI chief as Madhabi Puri Buch's term ends on February 28th. The Finance Ministry announced the search for the next chairperson of the market regulator, the Securities and Exchange Board of India, with advertisements placed in leading newspapers across the country. Applications for the role, which offers a term of up to 5 years or until the age of 65, will close on February 17th, 2025. Remember, this 5 years includes a 3-year fixed term and a possible extension of 2 years. Narayana Health has launched an ambitious health insurance plan, Arya, with an immediate coverage of up to 1 crore rupees protection. Arya offers comprehensive coverage and preventive care to bridge gaps in health insurance. The Arya insurance plan offers hospitalization coverage ranging from 25 lakh rupees to 1 crore with flexible top-up options starting at 25,000 rupees. Remember, this is not the first insurance plan offered by the Devi Shetty-led hospital chain, but this has been in the works for the last many years, and you heard this first on Duologue with Barun Das when Dr. Devi Shetty was in conversation with TV9's MD and CEO Barun Das. Take a look at what they said.
See, the health insurance what we are talking about is one way of delivering health insurance, but we are looking at a dramatically different way of health insurance. Our concept of health insurance is a integrated health care, wherein as a hospital, we take care of the primary care. Currently, the health insurance companies do not cover primary care. We want to take care of the primary care.
Primary care as in OPD care?
Yes, yes. Home care, primary care, secondary care, tertiary care. Now, when we become an integrated health insurance provider, it's called managed care, wherein you pay X amount of money to us. Then we will spend a lot of time in ensuring that you don't fall sick.
That is,
if you are a diabetic,
yes,
we'll ensure your diabetes is under control.
That is what,
if you are a hypertensive, we'll control the hypertension. And if you ignore our advice, after some time we'll say, look, we are not going to insure you.
That is the model. This
is a model which is practiced in US by Kaiser Permanente, which is one of the largest health insurance companies in US. And it's called managed care. So by us taking care of your health, your interest and our interest is aligned.
Are converging, yeah. That's
the model we are launching.
Mama must be missing us, na?
Let's take it for a spin, give me one day. Feel the itch under my skin, it's a fun day. You be like when you see we in the hey. It doesn't matter, just gotta get the way.
New GT line, Taigun and Virtus. Volkswagen.
Watching Newsline Live, I'm Karthik Malhotra and we bring you the run-up to Budget 2025, a special coverage where we put the spotlight on key demands and focus areas for Finance Minister Nirmala Sitharaman. On the show today, we focus on India's job story. Is Budget 2025 going to be another year and the onset of another year of jobless growth? Or is Finance Minister Nirmala Sitharaman really going to go ahead and inject that boost of optimism in the job creation scene, the private jobs all across fields from manufacturing to services, startups to IT, as well as infrastructure jobs? This is the focus on the show today. But some key specific critical points that we want to address as part of our budget special focus on job creation. Number one, is there going to be more budgetary allocation for job growth? Remember, last year, Finance Minister Nirmala Sitharaman had allocated various schemes, but we really don't know what has been the outcome of those schemes just as yet. So that brings me to the second question. The employee-linked incentive scheme announced in Budget 2024. Is Budget 2025 going to give us some details on the hits and misses and hence a reformulation of the scheme? Next up, formalization of informal jobs. Is that going to be a priority for the government in Budget 2025? Remember, the growth of gig economy and jobs, the informal jobs it creates, is something which should become a priority. Next up, skill development. Is there going to be a renewed focus on making the youth of India, empowering them with skills which are required to be employable? Finally, the manufacturing jobs. Is there going to be greater capex allocation for boosting the Make in India program and the PLI schemes therein to really give jobs in the manufacturing sector as India tries to compete with China to become the factory of the world? The internship scheme, which was announced in last year's budget, is it here to stay and is it going to find takers in corporate India? Gig workers. Will budget include the excluded section of the informal workers this time around? And women labor force participation, which has been abysmally low, is there going to be a fillip by way of Budget 2025 to include more women in the job scene? And finally, we're bringing this coverage days after the launch of AI chatbot, including the likes of Chinese DeepSeek. Is AI in workforce going to be a focus for the government this time around? Joining me to discuss these and more issues is a panel of very special guests. I've got with me Mohandas Pai, Chairman Arya Capital, Professor Arun Kumar, a senior economist, and Prabir Jha, a distinguished HR strategist and founder and CEO of People Jha People Advisory. Mr. Mohandas Pai, let me begin this with you and pretty much throw the floor open to you. What do you expect the budget 2025 to be? Is it going to be another year of jobless growth, or just some schemes that put a tick in the box without really creating jobs? Or are we going to see real affirmative action on job creation?
Look, the theory of jobless growth is bunkum.
Okay.
Jobs are being created. If people shut their eyes to jobs being created, it's too sad for them. Look at the EPFO data. 1.6 crore new people have joined the formal workforce, out of which 52% is the age group of 18 to 28, for whom it is the first job. So I think we should debunk this jobless growth. You cannot grow an economy at $350, $400 billion without jobs. All right. The big challenge for India is 80% of jobs that are created in the formal sector have pay less than 20,000 rupees a month. We need to create better paying jobs which pay 35,000, 50,000 rupees a month. Second important thing is, in agriculture, 45% of workforce is there, but 63% are women, 37% are men. And the number of men in agriculture is coming down because they're migrating. So we have to create more jobs in rural areas. We need a scheme where in the 400 poorest districts, job creation is incentivized by giving a grant of 2,000 rupees for every formal job created there, along with paying the employees' provident fund and ESI contribution. So we need a massive job creation scheme, because the biggest challenge for India is good job creation. We are creating jobs, but we're not creating good jobs, well-paying jobs. We are creating jobs in the south of India, not in the north of India, where more people are coming in the workforce. Even among the educated sector, women graduate more than men today all across India. And the largest number of women graduates coming out is in North India. So we have to create a lot of jobs. And for that, a targeted program of 400 poorest districts job creation is very important. Next is, we must focus on investing in the 5,000 small census towns, because urbanization creates large amount of jobs. Urbanization creates a lot of opportunities for people. So we have to urbanize in the 5,000 small towns all across India. We need a very holistic program. And I think the budget should focus on jobs, jobs and jobs, because good job creation is the biggest challenge for India. And this government in the 12th year, the 12th budget, I think, has to really step on the pedal. Last year, they came out with an internship program, which was very anemic. Which is very, very anemic, with large numbers being targeted. It has to be designed better. And I think it has to be designed better to reach those large numbers. And even if you say gig economy, please remember the gig economy is part-time work. Yeah. It's not full-time work. You say, I'll do something for the gig economy for people who deliver, etc. That's not going to get you a good money. It's part-time job. And we must recognize what it is. We must focus on full-time formal job creation and incentivize labor-intensive industries, create urbanization in the smaller towns, and incentivize job creation in the 400 poorest districts.
All right. So if I hear you correctly, you're saying jobless growth is a bunkum theory. It needs to be debunked. What you're saying is that there are enough jobs being created, but those jobs just don't pay well enough. And that takes a beating on consumption.
And the large number of jobs are in South India.
And a large number of jobs in South India. There is a South-North divide in job creation. Okay, let me bring this now to Professor Arun Kumar. Professor Arun Kumar, you work extensively in the MSME space. Do you echo the sentiment of Mr. Mohandas Pai that jobless growth is bunkum, or do you have other data to support and counter the EPFO data by saying that there are actually no jobs in the MSME sector?
No, I think when you think of a budget, you think of the macro. Now, what is the problem that the macro is facing? One is external and the other is internal. The external environment is hugely uncertain after President Trump has come in, because he's talking about tariffs, he's talking about various other things which will affect the Indian economy. If he puts tariffs, there'll be problems of supply chain. There'll also be problems with regard to the increase in prices if tariffs go up. And if there's competition globally, or to raising tariffs, then of course what will happen is there will be deglobalization. So we have to think in terms of what India would do if tariffs are raised by President Trump, or if he forces us to lower the tariffs, which have been going up for the last 5-6 years.
Okay.
That impact our industry, and therefore it will have impact on employment and so on and so forth. The second point I want to make is that in India, if you calculate, roughly about 27 million young people in the age group of 15 to 29, they're coming into the job market every year. We are only talking about creating 5 to 8 million jobs. We are not catering to 27 million. So that's a huge number. Plus, there's a huge backlog of jobs because our labor force participation rate is very low compared to other large economies like Brazil, China, USA, etc.
Right.
According to the ILO definition, our labor force participation rate is only around 48%. Government, of course, claims it's larger, 55%, because the definition of employment is different than that of the ILO. But comparable data for Brazil, China, US, etc. is in the range of 65 to 70%. So we have a lot of people who are not looking for job, they're doing free labor, and that is not counted in the ILO definition. So our unemployment problem is that in agriculture, there's a lot of surplus labor, there's disguised unemployment. And in the micro sector, which employs 97.5% of the MSME sector's employment, that employment is going down as the micro sector is getting killed.
Okay.
Small sector is also facing huge problems because of GST. So I think what we need to do is step up our investment in job creation. There I agree with Mr. Pai that we need to create more employment. But how do we do that? If you look at last year's budget, we increased allocation to capital intensive sectors like, the railway freight corridor,
all
the highways,
infrastructure overall at 11.11 lakh crore rupees.
Yeah. So those are not really, those are very capital intensive. Earlier you would see on a road project hundreds of people working. Now there are only 10 people working directly with big bulldozers and big cranes, etc. So even those are not really labor. So where is employment generated? It's in the rural employment guarantee scheme. It's in the education sector. It's in the health sector. But you find in real terms, those allocations have gone down as compared to the earlier year.
Right.
Now, if you reduce, in the labor-intensive sectors and raise in the capital-intensive sectors, then there's going to be a problem. Private sector, because of the lack of adequate demand, is not investing enough. The investment rate in the private sector, the Minister of Finance has been repeatedly saying that the private sector needs to come up and raise the investment. Now, they will raise investment provided capacity utilization goes up. And if you look at the RBI data on the organized sector capacity utilization, it has hovered between 70 and 75%. You need to go up to 80-85% for investment to be buoyant. And then probably, in the organized sector also, there'll be more employment generation. However, the challenge of AI is very severe because AI will displace immediately large number of people like call centers, BPOs, etc. Bots will do the work. A lot of skilled labor also, like for instance, lawyers work. You can get a draft ready and then you only need to tweak it. So the amount of time spent on, say, drafting would go down. Similarly, for doctors, you have the test results and the AI will give you a preliminary result. So the doctor's jobs also will be affected. So that's very skilled jobs also are likely to be affected.
Right.
And
so whether or not AI will take jobs or create jobs.
Elon Musk is saying that within 1 year, the AI will be able to do everything that human beings can do. So
if we trusted everything that Elon Musk said, we would be in a very different place. So I hear you, Professor Arun Kumar, but hold your thoughts there. Let me bring in Prabir Jha also into this conversation. And we will spend some time on AI as well as on the gig economy, two pertinent points raised by you and Mr. Mohandas Pai. But Prabir Jha, if I were to come to you at this moment, jobs don't pay well enough because perhaps corporations don't find the need to pay greater salaries as there is so much arbitrage available and the opportunity costs are so low. So how do you incentivize corporate India to pay better salaries?
Yeah, so I think a very interesting conversation so far. You can incentivize, and those are downstream effects. The fundamental question that I believe, which I should table up front is, I liked what Mohan said, that, at the end of the day, overall growth of the economy has to be almost co-joined with increase in jobs. It's a huge problem. And at the same time, I do not think that, any dole-based artificial job creation just because, you're able to kind of meet a certain political compulsion is a solution. I think also an over dependence on only the private sector, the organized private sector, to kind of generate all the jobs very clearly has a simpler answer in terms of, what would be the fiscal incentive for, corporates to kind of make that investment,
Absolutely.
the need to hire people and stuff like that. A deeper question that I have, and I think in one of our earlier conversations, I've brought this up, and the budget, at least for me, is not going to be a silver bullet. It will be more, as I think Professor Kumar said, it's a statement of, intent. And I think execution still needs a lot to be delivered. My basic thesis is, one is the demand for labor. The other is the crisis of skills. It's not just about that, you just get anyone in any job and, therefore you've met the job agenda. I don't think that is going to be sustainable. A sustainable employment or a job creation agenda will need us to really focus on what are the emergent skills, what is the upskilling needed, what is the reskilling needed, are people willing to do it, is society willing to change its mindset? The over proliferation of universities, I have never been a strong champion of that.
Okay.
We have to look at stronger vocational support. We've got the society to believe you don't just have to be an unemployable graduate.
Right.
And the plethora of education. So choice of India's growth strategy, more so now in the context of also some of the Trump-led issues, what are the sectors the government wants to prioritize? Where would the maximum number of job opportunities get created? Where would skills for that get fabricated, manufactured, repositioned? And in my view, issues of compensation will follow only when there is appropriate skill and there is, a reward for that skill in terms of, the competitive gains that the private sector has.
Right.
So
I
I
agree
think
with
it's
you.
a more complex exercise, but I think unless you see it more seamlessly and start connecting and rewiring all the dots, I don't think just one aspect of the budget is going to solve the unemployment crisis that we have.
All right, so not a single aspect, it has to be seen more holistically. Skill development needs to be the need of the hour, and the government, as per Prabir Jha, needs to focus on skill development. But Mr. Mohandas Pai, if I can bring you back into this conversation, see, skill development, and there have been investments made in budget after budget on enhancing skills, but skills also change, pretty much every week, every month with new technologies coming in. So skills is one part of the debate, but specifically what the budget tried to address last year were two prominent schemes. One was the internship program, 1 crore Indians to be given internships. I want to understand, is an internship enough, and do internships willy-nilly lead to formal job creation? And the second being the employee-linked incentive, where the government said that I'm going to pay, some part of the salary and I'm going to make the first contribution to EPFO. But what happens to the remaining 11 months? Does corporate India need so many people as the government wants them to hire?
Look, let us make it clear. Internship only solves a small part of the problem, the discovery problem. How do you discover people who are competent and employable by you? So you have an internship program where people come and work with you for 6 months, 1 year, and you find that some of them are very good, some of them have got an aspiration, and you hire them because you need young people to join, and there is always space in the corporate world for that. So it is a part of the puzzle that has to be done. But the big issue that we have to face is, how do we create more labor-intensive jobs? Please remember, we get 1 crore graduates every year. There are 4.3 crore young people in college, 1 crore graduate. About 60% of the graduates are in North India, in the states of UP, Rajasthan, Madhya Pradesh, etc. Now we have to create jobs there, and men will migrate, women will stay back. That's why a large number of women who are well educated are not in the workforce because they don't migrate. So India has got a structural problem and is not a national policy issue, it's a statewide issue. In the south, you don't get people. I just came from Kerala. I just went there for a pilgrimage, and I found in many of the restaurants, you got a lot of people from the northeast of India coming and working in the service industry. Huge numbers, 45-50% of the girls from the northeast and the boys from the northeast. Why are they coming here? Does Kerala have a high unemployment? Kerala has high unemployment. Why is it happening? Even in Bangalore, in the service industry, you don't find locals. You get people from the northeast. In the gig economy, you get people from Jharkhand and Bihar. The locals don't work. So it's a very complex issue. And as far as compensation and salaries are concerned, and skill development is concerned, I think the challenge we have to face is a large number of semi-skilled, marginally skilled people with less education who are coming into the workforce.
Right.
It's not about white collar jobs as much as that jobs.
Right.
Like Professor said, yes, 2 crore people need jobs. 2.5 crore people were born 21 years ago, come into the workforce, maybe 2 crore people need jobs.
That's
the
right.
EPF formalization is 50, 60, 70%, but they need jobs. And where do they need jobs? They need jobs in specific areas. See, I had a study by Narendra Pani in Bangalore, who said in many districts of Bangalore, many districts of India, people are coming off the land. That means they're coming off the land because agriculture has got mechanized. We've seen data for workforce participation. 63% of people in agriculture are women. It can possibly go to 65%. Men are coming down.
Right.
So men means are migrating. So it's a very complex issue. We need a variety of things. But the most important thing, like Professor said, another gentleman said, is we need higher growth. We need growth where jobs are incentivized, not capital.
Right.
The tragedy of India is we incentivized capital for the last 70 years. You set up a 1 lakh crore refinery, you get almost the whole money back in a few years. But it creates only 2,000, 3,000 jobs. China incentivized labor-intensive industry in the beginning when they opened up. They did it the right way. Capital-intensive industry came up much later. We have to find out labor-intensive industries. We must get them in the smaller districts. We must incentivize them. We must have 5,000 census towns, and those areas will see a growth in employment, and soon they'll have a better paying jobs coming there.
Let me take this.
Incentive jobs in Bangalore and Bombay doesn't
I see the point you're making. Mr. Mohandas Pai. India needs to think beyond IT. India needs to think beyond those key metro locations and the focus on South India, and job creation has to be more universal in a national context. So let me bring in Professor Arun Kumar again into this debate. Professor Arun Kumar, if we are able to create more manufacturing clusters in North India, which are labor intensive, which will be driven by the MSME sector, which will see migration of agricultural workers who don't pay taxes, and with mechanization, their migration to manufacturing, which are semi-skilled jobs, there is going to be a greater possibility of growth coming in. So what should the government do? I understand states will have to do their own part, but what should the central government do to make this transition from agriculture to building other manufacturing clusters and people migrating there happen?
So you're right, we need to create manufacturing at the level of the small and the micro sector. That is where, it will spread the manufacturing sector into areas where it hasn't really done well. For that, you have to provide incentive to the micro sector and to the small sector. Unfortunately, all the MSME concessions go to the medium sector, but not to the micro sector. The average employment in micro sector is 1.7 people. They cannot get formalized. They need to be helped with technology, with marketing, and with finance. So you need to create cooperatives of these micro units so that they can actually collectively do that. And 97.5% of the employment of the MSME sector is in the micro sector. So therefore, micro sector is very, very important. The organized sector has enough capital. Once demand revives, then they'll start investing more. But unfortunately, there the mechanization is so much, automation is so much, and with AI, it'll get even worse. So I think what we have to do is we have to focus on the other sectors, generate demand, so the organized sector can also expand. So I think it has to be a collective kind of an effort where agriculture is helped, where education and health are helped, because that's what will create productive employment. Right. The Acer reports that have been coming since 2005, they are telling you that 50% children in the 5th class cannot do 2nd class reading, writing. So much better quality education. We need to invest a lot more on education. We have actually come down in real terms from 3.8% to 3.4% on education. That needs to go back to above 4%, and the target should be 6% of GDP. Similarly, in the sector of health, to have more productive labor, we need better health. And therefore, instead of 1.3%, we need to move up to 3%. Now, that will mean resources have to be raised. And that is a big elephant in the room. How do we raise resources?
How do we raise resources?
When the economy is still very large. And we are only at about 6.5% of GDP on direct taxes.
Right.
So what to do about those direct taxes? That's another issue that the finance minister would have to deal with. And GST would have to be reformed, because GST has actually damaged the unorganized sector a whole lot.
Well, Professor Kumar, in the interest of time, let's leave the GST debate maybe just ahead of the next GST Council. But I want to bring in Mr. Prabir Jha for his final words on this multifaceted issue of job creation and the government wanting to collect enough taxes at the same time. And there are talks, and in fact, even Mr. Mohandas Pai has been advocating for more disposable income in the hands of consumers. And and tax-paying citizens. So last word to you, Prabir Jha. If there is one action point and one area where the government must focus its energies and its budgets, put its money where its mouth is for budget 2025, is that going to be skill development? Is that going to be education? Or is that going to be more manufacturing coming by way of migration from farm to manufacturing clusters?
So, I will always take a little long-term view. I think a core issue in India, which we don't want to talk about, is the inadequacy of skills in any sector or most sectors. I would possibly pick 5 or 6, and the gentlemen have talked about some, and I completely concur, whether it's infrastructure development in a more wholesome way, which also leads to better town and newer city enhancement. It cannot overload the current set of urban centers. It's already living in hell. That's something that I would possibly shift. I would look at healthcare. We talked about it in one of your earlier shows. Right. It has a huge ecosystem that it can spawn. Automotives and related, auto ancillary support service. Sure. Huge. There are no truck drivers. You have trucks, there are no truck drivers. So At the end of the day, we have to look at skills, and we have to end this obsession with just making everyone a graduate. I do not buy the fact that everyone who becomes a graduate is necessarily better educated or is better employable. Right. So I think the government can be very practical about its focus and combine its growth engine with, and I agree completely with, possible max job optimization. That's where I would put my money.
All right. Well, let's leave it at that. Prabir Jha, Mohandas Pai, Professor Arun Kumar. Gentlemen, thank you so much for joining us right here on News 9 Live this morning. We will leave it at that for now. But remember, just a few days to go for Budget 2025. You will catch all the action right here on News 9 Live. Thank you very much for watching.
It's not the fiefdom of politicians. They owe it to the people.
Matter is now more about faith of the millions of devotees than just political slugfest.
Does that mean that I can't get a job in Chennai, although I may be best suited for that particular job? They have more civic sense. They have more of civility than all these men. My name is Sudha Sadanand. Welcome to the South Indian.